Good morning, traders. Federal Reserve kept its interest rates unchanged last month with the expectation that it will plan to raise them by the year's end. That, of course, assumes that the economy can maintain its upward trajectory. Data releases this week, including Friday's monthly jobs report, should offer clues on whether the economy is up for the test. Up first is a key indicator of manufacturing activity on Monday. It is especially important because that is a clear weak spot for the US economy, and we can see markets are already reacting on that news. On the other hand, moving to Deutsche Bank shares, Deutsche Bank AG talk with the US Justice Department to settle a high-profile set of mortgage security cases are continuing, with no deal yet present to senior decision makers for approval on either side. As all of my clients, I have closed the position on Friday since Monday is a holiday in Germany and Deutsche Bank shares will not be traded during the day. Um, on the other hand, moving to crude oil, OPEC's move to cut output might be too late. After pumping full tilt for the past 2 years, the Organization of Petroleum Exporting Countries is weighing on a plan to reduce production by up to 700,000 barrels a day later this year. But many analysts say that proposed reduction isn't big enough, nor it will happen quickly enough to address global supply glut that has kept oil prices low. Going into this year, many forecasters project that supply and demand for would return to balance by the end of 2016. But even if OPEC's agreement most now don't see rebalancing until the middle of next year or even later. Global inventories are near record levels, and OPEC has been outflanked by shale producers that have withered oil's collapse and can boost output when prices rise. So basically speaking, the move to the upside that we see right now is just purely based on speculation. Until a concrete deal is struck, we cannot consider a possible buy position for the long term. Moving on to the British pound, besides the US data that is coming out today, the British pound continues to fall since Asia morning after Prime Minister Theresa May said that the UK would kick off the process of separating from the EU by the end of March. In Asia trading, the pound fell 0.3% to uh, 1.2940 and currently is at 1.28862. The daily drop wasn't spectacular enough. The pound posted several larger daily declines last month, but it followed another rough quarter for the currency. And as we can see, this is a good opportunity to wait for the market to retrace the current downside move and look for a sell position. Moving on to China, China's yuan officially entered the International Monetary Fund's basket of reserve currencies on Saturday, a telling trophy in the transformation of the Asian giant's geopolitical status. Along with the dollar, the euro, and the yen and the pound, the yuan will now be used as one of the IMF's official lending currencies in emergency bailouts. The fund's stamp of approval confers a measure of legitimacy on the yuan after years-long effort by Beijing to internationalize its currency. The move shows how China's financial diplomacy has evolved from heavy-handed aid to governments in decades past to a multi-pronged strategy to challenge the US global economic dominance. Well, that's it for me for today. I'll keep you in touch. Take care.